Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. We've got a lot to discuss. President Trump extending trade talks with China for another 60 days as both countries continue to iron out key differences. Joining us now to discuss that and a whole lot more, the 79th Secretary of the Treasury, Scott Bessent. Mr. Secretary, good morning. Good to see you.
Morning, Jonathan.
You're a cover model now. You're famous. Can we get that front cover up for Business Week this month? Mr. Secretary, I remember when you were just Scott Bessent and we could go for breakfast together, the three of us, and no one would bother you. What happened?
I don't know, but I hope it's not the curse of the cover.
Is this a top?
Historically, the being on the cover is a curse. So,
well, this equity market is not cursed. It keeps grinding out all-time highs. There is some confidence that we're settling some issues on the trade front. There's one issue that came up this week that we'd love to hear from you about, and that's Nvidia. Where did this agreement come from? You've been quite innovative, this administration, on trade issues. Where did this come from? Who came up with it?
The president. The president, as I tell everyone, the president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And I think that this is a very unique solution. Allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword, unique. Is it unique to NVIDIA and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right, so we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the NVIDIA chips becoming the standard in China. Look, NVIDIA is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the NVIDIA, Jensen Huang, just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you don't want to. We're not sending out the highest level chips, and we don't want to sell everything to everybody. So there is a need for intervention. And the Wall Street Journal just let her rip. Kind of bunch of grumpy old men over there. I was with them yesterday.
This is going to raise some revenue. What do you plan to do with it?
Pay down the debt.
It's all going to go to pay down the debt, because we have heard some stories about the money going back to consumers, going back to citizens of the United States taxpayers.
Well, President Trump's talked about that, and look, these the bottom 50% of wage earners in the one big beautiful bill are getting a lot of money back. No tax on tips, no tax on overtime, no tax on Social Security. Auto loans are going to be tax deductible. So I think if we could make a substantial dent in the debt repayment, then we could talk about a program like that.
Could you share with us the kind of numbers you're thinking about at the moment, just in terms of revenue raising? And not just the NVIDIA deal, I'm talking about the tariffs on top of that. What are we raising at the moment, month on month?
Well, Jonathan, I've been saying that we could hit $300 billion this year, and I think that number is going to be low. I think I always like to come in low and then surprise on the upside, but I think in the next days or weeks, I may have to move that number up substantially.
You've heard the debate playing out on Wall Street now for a number of months. Who's going to pay the tariffs? By definition, the importer will pay the tariff. The more important question here is who absorbs the costs, whether it's the foreign supplier, whether it's the domestic company here in the United States, or the end consumer. We got some data yesterday. You've seen it. We've all looked at it. Limited tariff pass-through relative to what was expected. Because of that, a lot of people are suggesting that maybe companies are absorbing costs in a way we didn't anticipate. Perhaps the pass-through will be more muted in the future. Are you comfortable with where things are now, or do you think things might rebalance in the months to come?
Jonathan, I think your framing there is exactly right, because obviously the tariff itself is paid at the port, but what if the producer in the other country has lowered their price the 10, 15, 20% so that there is no price change with the tariff? And obviously our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. So that is an employment agency, and my view has been that they would continue to eat the tariffs. They are doing that. So I think what we've seen is likely to continue happening. I also think there are probably a lot of corporate margins that got very fat during COVID, and now we're seeing a return to normal pre-COVID margins.
You see this as some kind of redistribution between corporate America and maybe the consumer, Main Street and Wall Street?
I think this administration is all about Main Street, but Wall Street's hitting a new high. So it's this false equivalency. It's not either or. I tell everyone, I call it parallel prosperity. Wall Street's done great. Main Street can now do great.
Wall Street might do even better if the Federal Reserve cuts interest rates. The president was pretty clear yesterday, put out this comment, Jerome Too Late Powell must now lower the interest rate. Is it reasonable to give them a bit more time to draw conclusions about what's happening here?
Well, I think what we could see is that, first of all, what if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that the Jay Powell gets the nickname Too Late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment, and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
What did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden, it was hard to know whether, TDS was a Trump dementia syndrome or Trump derangement syndrome or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed. The foundations of the Fed, and how did this happen, and why did it happen, and how did the leadership let it happen?
When it comes to Director Myron, do you expect him to stay on past the January term that expires from Kugler's seat?
I wouldn't expect that.
So who are some names you're thinking of the Kugler seat? Because everyone has been focused on who is going to fill the chairmanship role. Who are you thinking to fill that extra seat?
Well, Anne-Marie, we're working on the big list right now. I think there are going to be a couple more names revealed today. They're going to be private sector names. So we had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people, and then we will get to the second seat.
Can you give us some names, a little bit of a tease? Maybe people that have been on this program?
Well, I just did tease telling you there would be some private sector names.
Okay, when it comes to the Fed chair, though, can you give us a sense of how many names you're actually thinking about?
Well, I'm going to cast a wide net. 10, 11 people, and then there'll be a group of us who are meeting with them, and we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important because the Fed stepped, I think, big-footed the other regulators. The Fed's one of three regulators: Federal Reserve, OCC, and FDIC. And I think that they need to understand that they are one of three. And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit too.
After you do this process, how many names are you going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. Two of them couldn't be more different. So they were under consideration.
I give you credit for coming up with a really credible list to replace the Federal Reserve Chair, Jay Powell. Without a doubt, I think most people that come on this program agree with that. What I want to talk about is the BLS now, because there's some controversy around this pick. I'm sure you've heard some of the concerns. E.J. Anthony had said the following earlier this week before getting the pick from the president. Until this issue with payrolls is corrected, he said, quote, the BLS should suspend issuing the monthly jobs report, but keep publishing the more accurate, though less timely, quarterly data. We'd love your thoughts on this. Is that something you'd support?
Not at all. And look, what somebody says when they're a private citizen is very, very different. I called for a shadow Fed chair, and now that I'm in the seat, I don't think we need to do that. And I was there when EJ was interviewed, and he is incredibly qualified. And I think the most important thing here is that we get back to the integrity of the numbers, because it just became okay, just like so many things in our government, for it to get sloppy. And EJ is precise. He has a doctorate in economics. I think President Trump put a lot of thought into this. He was very thorough in his questioning of him. So what we want is good data, because you can't make good decisions without good data. As I just said, it's very likely that the Fed would have been doing something else if in June, in July, if they had had this data.
Well, let's talk about the data we've got and the process we have and how we might improve that process. As you know, that data is prone to big revisions. In your career on Wall Street, we've all been dealing with this for a long, long time. Because of the process and the lag time in the responses, it is constantly reviewed month on month as you get more responses from corporate America. How can we improve that process so this data is less prone to these big revisions?
Well, I've been in government now for 7 months, and I can tell you that if we take the IRS, which I'm now the head of, they've been working on a tech upgrade since 1990. We brought in a young person to fix that. The tech upgrade has been underway for longer than he is old. So he wasn't born when the tech upgrade started. So, I just think like this idea that we're accepting this mediocrity in government, why don't we bring things into the 21st century? Why don't we bring it into the digital age? Because, I don't know about political bias one way or the other, but what I can tell you is that the sample response size kept getting smaller and smaller, and then they filled in the cells. And anytime you get judgment versus data, then things become qualitative and not quantitative. And I think EJ is going to do a great job of bringing back quantitative standards. I think these attacks in the press, I think are all wrong of him.
It's not in the press. It's even within conservative economic circles that don't think that he is credible to run the commission. Is the Trump administration open to putting more resources then to BLS, maybe lifting a hiring freeze?
Well, Anne Marie, that's more of a Democratic idea that we need more. It's always money. It's always money. It's New York City schools, Chicago schools, DC schools. You get terrible outcomes. I think that he's going to sit back, look at the process, and how can we use technology to do this better? I got to Treasury, and it was shocking. We process 1.5 billion payments a year, and 500 million of them, 1/3 of them, did not have what's known as a TAS, Treasury accounting symbol on them. And people were just hitting send. And it wasn't a gigantic leap just to try to get people to do their jobs.
This has big implications for how people view credible economic data, but also the markets as well. So let's talk about financial markets and the bond market. You've always been a 10-year man. The spread between the 2-year and the 10-year, I think, has been really stable over the last several months, where we've started to see some leakages between 10s out to 30s. That 30-year bond, as the Treasury Secretary, I remember you referring to yourself as the nation's top bond salesman. Yep. What's the usefulness of issuing a 30-year bond when it feels like at the moment we're outsourcing borrowing costs to what happens in Japan, what might happen in the UK, what happens in Europe? What's the value of issuing that?
That's a great question, Jonathan. And look, we are committed to keeping inflation expectations low, and this is a global phenomenon, whether it's the 10 or the 30. The U.S. 10-year is one of the few 10 years where the yield is down on the year. So that tells me that there's credibility from Treasury, credibility from Fed, that the inflation expectations are well anchored, but there's definitely leakage from the Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control. In Germany, we saw a substantial spike in German rates in the past week also. So, our 30-year is getting dragged along with that. We've been refilling the Treasury General account, which during the debt ceiling standoff got run down, and we're doing that with short-term bills.
Do you see more reason then to pare back on 30-year issuance with all this in mind? And this is a change again for you now in the seat as you look at these developments and rethink things. How are your thoughts on that matter evolving?
Yeah, they are evolving, and we'll see where things go. I do think as we bring down this big deficit that we inherited, I think that the U.S., that the entire U.S. curve can have a parallel shift down relative to the rest of the world.
Do you think you can work with the Federal Reserve on this matter? So if we take the weighted average maturity of Fed holdings at the moment, I believe that's running at about 9 years. The issuance of the average maturity of outstanding bills, notes, bonds, that's closer to 6. Do we need to narrow that gap a little bit?
Yeah, look, I don't think the Fed needs to get back into the large-scale asset purchase business, and we've had very good demand, especially in the belly of the curve, which is where asset managers seem most interested now.
When it comes to other things you're working on in Washington, D.C., there's still this stock ban legislation that has been circulating around Congress. Is the president prepared to sign that bill?
I don't think we have the perfect bill yet, but I am going to start pushing for its single stock trading ban, because it is the credibility of the House and the Senate that you look at some of these eye-popping returns, whether it's Representative Pelosi, Senator Wyden. Every hedge fund would be jealous of them, and the American people deserve better than this. People shouldn't come to Washington to get rich. They should come to serve the American people, and it brings down trust in the system, because I can tell you that if any private citizen traded this way, the SEC would be knocking on their door.
Do you think it needs to extend, though, beyond single stocks? These individuals can still have ETFs and other products.
Well, what I used to do at my old firm was you could buy ETFs. They had to be widely held ETFs, so they couldn't be of a small size, and there was a long holding period. The House and the Senate, they're supposed to be working for the American people, their constituents. They're supposed to be making law, and they shouldn't be trading every day. I'm not going to name names, but there was one person in Congress who had 1,200 or 1,300 trades 2 years ago, and my hedge fund didn't have that many trades.
Do you think it needs to also extend to the executive branch and include the president and the vice president?
I think that they would be fine on the single stock and the holding period.
Maybe they're just great traders, Mr. Secretary. Do you not think they're just great traders?
It is a statistical anomaly. Warren Buffett wrote an essay once, and he talked about the zoo in Graham and Doddville, and if all the orangutans in that zoo kept typing the Bible, then there's something going on in that zoo. There is something going on Capitol Hill in terms of information leakage that is statistically not sound.
Do you think those restrictions should extend to the executive branch?
Sorry?
Do you think those restrictions should extend to the White House?
Well, they already extend to Treasury.
Have you spoken to the president about this? Is he comfortable?
Well, the president's come out in favor of this, and Hakeem Jeffries is in favor of this too. And I can tell you, if I were Congress and I were looking at my ratings with the American people, I would be pushing this, because again, it's an extractive class. You should not come to D.C. expecting to line your pocket. You should come to D.C. to do the people's business.
We couldn't agree more, and it's been greatly disappointing to see that there's tighter restrictions on how journalists trade than over some members of Congress in Washington.
Yeah, it is one of the things that I think we can do to get trust back into the system.
Just wanted to finish on the president's visit to Alaska going into the weekend. Anne-Marie's going to be there. What do you think we can accomplish this weekend?
I think the president has been thinking about this a long time. He believes, as do I, that this war never would have started if he had been president, and he is committed to ending the bloodshed, but not at any cost. Not at any cost. I think everyone has been frustrated with President Putin. We expected that he would come to the table in a more fulsome way. It looks like he may be ready to negotiate, and we put secondary tariffs on the Indians for buying Russian oil, and I could see if things don't go well, then sanctions or secondary tariffs could go up.
What about China? They're the main purchasers of Russian crude.
Again, I'm not going to get ahead of the president, but the president is the best at creating leverage for himself, and he will make it clear to President Putin that all options are on the table.
So sanctions can go up, or they can also be loosened.
sanctions can go up, they can be loosened, they can have a definitive life, they can go on indefinitely. There's this Russian shadow fleet of ships around the world that I think we could crack down on them. But Anne-Marie and Jonathan, the one message I would leave you with, it's that President Trump is meeting with President Putin, and the Europeans are in the wings carping about how he should do it, what he should do it. But the Europeans need to join us in these sanctions. The Europeans need to be willing to put on these secondary sanctions. I was at the G7 meeting in Canada with President Trump, and the Europeans kept talking about Senator Graham's bill to do the secondary tariffs.
Yep.
And I looked at all the leaders around the table and I said, is everyone at this table willing to put a 200% secondary tariff on China? And you know what? Everybody wanted to see what kind of shoes they were wearing.
I imagine the Germans went very quiet, and that's been a problem for a long time.
Yeah, it's put up or shut up time. The president is creating his own leverage. We need the Europeans to come in and help create more leverage.
Mr. Secretary, appreciate your time.
Good to see you.
You're enjoying this. I get the feel that you're enjoying this.
Sorry?
It's good to see you. You seem happy.
I think things are going well.
Jeannette Lowe of Strategas, a bed company, the team over there writing the following. Debate now is not about whether to cut rates in September, but by how much. Jeannette joins us now for more. Jeannette, welcome to the programme. Also a big question about who's going to be on the committee by the time we get to the middle of September and whether Stephen Myron can be confirmed by then. What are you telling clients about the prospects of that happening?
Yeah, so this is something that's kind of interesting because we think that the Trump administration would definitely like him to be on the Fed board before the September meeting. And the question also is, do they want him on the board before September 12th when the dot plots and the forecasts have to be submitted? So if the Senate's not coming back until September 2nd, we've looked at prior cabinet appointees early on in this Trump administration, as well as Myron's appointment earlier this year to the Council of Economic Advisors. And in general, it takes about 13 days for a cabinet member to be appointed. So if the Senate comes back on September 2nd, that does give enough time for him to be on the Fed board by the September 16th, 17th meeting, but it may not give him enough time to be in time for September 12th. So that might mean that the Senate Banking Committee has to come in earlier to get this confirmation process moving, to at least hold the hearing in advance so then they can start moving to a committee vote when they come back officially from recess and then move to the Senate floor.
Jeannette, how likely is that they're going to move this quickly?
I think it might depend on whether or not there's pressure coming from the Trump administration. If he asks them to treat this like a early cabinet member early on in the administration, obviously Marco Rubio was, confirmed quite quickly with only, I think, 5 days. So if it's going to depend if there's some pressure there to actually get this moving, since obviously it's not usual for members to be called back from recess early. But I think that's where there's going to have to be that pressure point, is whether or not that occurs to get the Senate to actually move and try to advance this a little bit more quickly.
And when it comes to Steve Myron, he has the benefit of already going through this process. What's the likelihood of E.J. Antoni getting confirmed to run BLS?
Yeah, I think that there's probably going to be, deference to the administration about getting his appointees in place. We haven't really seen any major pushback significantly from a few Trump nominees overall. And I think the other thing to kind of watch, too, with the Fed appointment is watch a senator like Tom Tillis, and see if he might actually start to raise some questions. Does he also, have a no vote in committee that could slow down the process? I think that's something else to kind of watch out for. But I think if in terms of the BLS appointee, there's going to be an effort to try to get his appointees to the positions. That's obviously been a fight within the Republicans and the Democrats in the Senate, and whether or not they should have abandoned recess in the first place because there's been such a lag in getting some of these nominees confirmed.
When it comes to Antoni, though, there's been a lot of pushback in conservative economic circles about his nomination. And when you look at who's on the Senate Committee on Health, Education, Labor, and Pensions, it's some Republicans where he cannot lose a single vote that haven't had a problem with voicing their concerns with the Trump administration. I'm thinking of Bill Cassidy, Ron Paul, Susan Collins, Lisa Murkowski. Do you think he really can get out of committee?
Well, I think obviously, as we've seen in the past, what happens in the hearing is most important. So if there is information that comes up in the hearing that could change how those senators view the nominee and their ultimate vote on the decision. But as we've seen in the past, some of these same senators have had issues with prior Trump nominees. But then when push comes to shove, they actually do vote them through committee and they do vote them through on the floor. So I think the hearing will be quite instructive, but it's always something to kind of keep in mind.
Given even conservative economists think this individual is highly biased and politicized, are clients telling you that they're concerned about the accuracy of the data going forward?
I think this is starting to become a conversation. We're starting to hear some questions about whether or not there could be some politicization coming now with the numbers and whether or not people can feel like they can trust the numbers as much. It's not an overt concern at this point, but I think that that's obviously going to be something that's going to be in the back of investors' minds, just thinking about whether or not there is some option going down the road. And now that we've had this argument come up with the past BLS commissioner and with the past jobs data, whether or not there could be some sort of either manipulation or the ability to put someone in there who could have a sway on the data.
Jeannette, when you engage with clients, if I could just jump in, forgive me. When you engage with clients, are they worried about this? Is this something that comes up repeatedly or something they're comfortable with at the moment?
At the moment, I think it's not a significant concern. I think obviously how things play out over the next couple of months will have a bigger impact. But of course, you are hearing questions just about whether the process might have a change now that we're seeing some movement. We're seeing a shakeup at the BLS, things of that nature. Obviously, there are also some clients who think that, some reform is necessary. So I think that there's also kind of like, let's do a little bit of a wait and see approach to this and see what might happen as this new individual comes in.
Jeannette, thank you. Appreciate your time as always. Jeannette Lowe there of Strategas, a bad company. Ann Sonders of Charles Schwab writing the following. Slightly hotter services inflation suggests the possibility the core PCE prints will be a little higher, though September is still clearly on the table for a Federal Reserve rate cut. Ann joins us right now for more. Ann, welcome to the programme. Some confidence maybe that we're seeing limited tariff pass-through, but maybe I think recently some nerves emerging that perhaps we're starting to see evidence of demand destruction. How concerned, Liz, are you about that?
Well, one thing that I think needs to be pointed out when you look at what was perceived to be fairly benign core goods inflation, up only about 1.25% on a year-over-year basis, is what the direction has been. So many people forget that we were actually with core goods, we were in deflation territory as recently as the second half of last year. So that's a full 3 percentage point more than increase from where we were at the latter part of last year, where you had core goods in deflation to the tune of -2%. So you've gone from -2% to 1 and change, and now you've got this hook higher on the services side. So I think this kind of data, inflation data, labor market data, you really need to dig under the surface to get a true sense of what the impact is. As to whether the Fed will cut, it depends on the next set of reports. I think the mapping to PCE suggests you could see a little bit of a hotter move. That doesn't tend to be as market moving as CPI and PPI, but that's what I'd be keeping an eye on.
Ann, as you know, the range of outcomes is still really, really wide. The way things are right now, they might change in several months' time. We talked a lot. Michael McKee was on the programme earlier, and we were talking about how much companies were absorbing at the moment and whether they pass it on in the months to come or whether they cut costs. Do you think September's still too early to draw any firm conclusions?
I think it is too early, but what I will say, and this has already been underway, and I think it will continue in the September and thereafter as it relates to the Fed, I think you're likely to continue to see a wider dispersion of perspectives from members of the Fed. Certainly when they're in the Federal Open Mouth Committee mode out there speaking, but even in things like the Summary of Economic Projections and particularly the dots plot, you're seeing that wider array. We had 2 dissents with the most recent meeting, the July meeting. I think that sort of dissent probability stays relatively high with a wider range depending on who the individual is on that committee expressing their views going forward. So I think that's kind of the name of the game, at least in the near term.
Well, if the tariff impact is mixed under the surface, when do you think we'll actually see it fully priced in?
Well, the problem is that this was not, a lot of people talked about the inflation impact being one-time in nature, a one-time price level reset. The problem is there's no one time as it relates to the implementation of tariffs. It has been such rifle shot on, off, delays, tariffs being used as a tool beyond just raising revenues or improving the trade deficit. So I think we've got the rolling nature of this. Several years ago, we talked a lot about rolling recessions, that we didn't think you were going to see an actual economic recession, but pockets of weakness at different times. I think that's manifesting itself in the inflation data too, meaning the rolling nature of it, where you see pockets of impact on the upside, you maybe get some pockets of offset on the downside, as opposed to anything that is one time in nature. And I think that will also continue to be the name of the game, because there isn't anything one time about how we're getting information on tariffs. And that increasingly makes it more difficult for companies to map out a longer term pricing strategy.
Well, when it comes to the Fed, do they even have the luxury of waiting to see the full impact if the labor market, Lizanne, is weakening?
That would be the primary reason why September is on the table. The Fed has essentially inferred, not that they're ignoring the inflation side of their mandate, but the trigger to move back to easier policy per what they did last fall is probably more on the labor market side versus the inflation side, unless you have a major, major spike in inflation from here. That's precisely what happened last fall when the Fed did launch what became only 3 rate cuts, but they launched it with a 50, and that was because of pretty significant concerns, turned out to be somewhat unfounded, but significant concerns about the labor market. So the inflation data is going to be parsed like it always is, but I think it's the labor market side of their mandate that will ultimately be the trigger for what they do and by how much.
Lizanne, let's push some of this conversation into the equity market. Record high in the S&P, record high in the Nasdaq 100 as we kick off Wednesday morning. Beneath the index, how much adjustment are you seeing in individual equities to the prospect of so-called demand destruction when you hear about companies like Carver, like Sweetgreen, facing a bit of a consumer slowdown?
Yeah, there's a lot of consolidation happening under the surface, which if you're only looking at what the indexes are doing, I think you don't pick up on that. I've talked to a lot of people who say, oh, tech's the best performing sector. It's actually the second best performing sector on a year-to-date basis, comm services being the other, but they're often lumped together. But each of those sectors only has about, I'm rounding, 60% of their stocks in the same kind of breadth pattern as the index overall. In the case of the Nasdaq 100, all-time highs, but less than 50% of the stocks are at all-time highs. You've got only, actually, I think it's less than 30% of stocks within the S&P 500 have outperformed the index itself over the past month. And you don't get much above a third of the index over any trailing period, 1 year, 1 month, 3 months, 6 months. So there's a bit more weakness and rotation and churn happening under the surface. It's somewhat similar to what we have seen in periods in the past, both in 2023 and 2024. And I think the fuller story, not the real story, but the fuller story may be getting told under the surface of these cap-weighted indexes.
Do you think that narrow breadth and high concentration is necessarily something to be concerned about, Lizanne? I think that's the ultimate question for a lot of people. I hear people point it out all the time, and then we just keep grinding out new all-time highs. Is it necessarily problematic?
Not if the market continues to do well. But if you look at the early part of this year, the period between February 19th, which at that time was an all-time high, and the intraday low on April 9th, those areas of the market, the mega cap, tech-related, Mag 7, whatever categorization you wanted to use, those were the areas that had the bigger drawdowns relative to the index. So that period between mid-February and early April was one where the indexes were dragged down even more, but you did have some ballasts within the market in areas that had not done well. So yeah, you're absolutely right. If the market continues to do well and momentum is on the market side, I think the pain trade is still probably higher, but that could be a situation that unfolds fairly quickly and akin to what we saw in that mid-February to mid-April period.
Lizanne, appreciate your time, as always. Ann Sonders there at Charles Schwab. I think think we're joined around the table by another Yankees fan. Is that right? Fair to say?
As soon as I saw the mug, I said, "Why aren't you just?"
I was trying to hide it because I'm pretty sure Scott Bessent, Treasury Secretary, is a Red Sox fan. So I didn't want to be total. I don't want to antagonize him, during this entire interview.
Tom Porcelli of PGIM joins us around the table. Tom, good morning.
Good to see you all.
It's good to see you. Let's talk about the state of this economy.
Yeah.
Let's start with the labour market first. Yeah. Where are we?
I mean, I've been on this program many times for many months saying there are all these cracks forming. And that as is true today as it was, sort of 6 months ago when we were driving that point home. So nothing has changed for us in that regard. In fact, what I would say is the payroll report, the much maligned recent payroll report, to me, that was just a manifestation of all of the other things that had been going on prior. So we weren't all shocked and bothered by it. I think it was just sort of revealing what was already in place.
Well, let's stay on payrolls.
Yeah.
Step down, clearly, very obvious. We've gone from a decent clip of gains to something closer to stall speed.
Yep.
I want to understand from your perspective whether you think that cements this idea that we've seen a cyclical turn, or whether it's more evidence of a structural shift, something developing on the supply side.
Yeah, so we think that things are slowing down, right? I mean, I think that's an important idea. Like, we don't think we're cyclically we're about to slip into a recession. Instead, what we've been saying is we're in this sort of muddle through backdrop, and we would define that as sort of 1%-ish kind of growth, 1 to 1.5% growth. And so that report is actually very consistent with our view in that regard. So when I think about Fed response function, we actually think the Fed, they are supposed to cut. I don't think that's for us, that's been our long-standing call that they would start cutting again in September. And so we feel good about that overall.
So how much?
Well, sorry, we feel good about the call overall. I mean, things slowing down is never obviously a good.
Understood.
You feel good about the call of the Fed cutting in September.
Yeah.
The Treasury Secretary is calling for 50 basis points.
Yeah, so look, do I have sympathy for that idea? The answer to that is, tell me what the payroll report's going to look like, in a month from now, or whatever it is, a couple of weeks from now, because I think you're going to need evidence for that. If it's just a sort of another really soft report like we saw, I don't know if that's the evidence enough to go 50. But to me, it's sort of semantics in some way, because whether they go 50 or 25, I think they're pulling forward a lot of the cuts that they sort of that the Fed was pricing in over the balance of the next year and a half.
If they go 50, though, what signal does that mean for how the Fed thinks of the economy right now?
Yeah, I think it really drives home that, look, the Fed already, and I feel like a lot of us, me included, I feel like a lot of us forget this. The Fed already had cuts teed up, right? They already were expecting 2 cuts this year, so they were expecting a softer economic backdrop. And so I think in that context, it's just very in keeping with what they're viewing. Show me another really poor payroll report, and I'll give you the evidence for, hey, maybe they need to do more. But I think for right now, it's pretty consistent.
We get one more payrolls report. I've got no idea what's in it. We'll get that on September 5th, a week later.
You don't know? They don't tell you anything?
Absolutely clueless. The BLS shares nothing with me. A week later, we'll get the CPI report. I want to finish on inflation and turn to that side of the dual mandate.
Yep.
Limited tariff pass-through relative to what was expected.
Yeah.
Do you think it remains that way in the months to come?
No, actually. I think you're seeing limited pass-through now because companies did a really smart thing. They built inventories in a really meaningful way. So that's sort of buffering the sort of the flow of the tariff inflationary impulse into inflation. But I'll give you one really interesting thing to think about. It's funny, we're having this conversation about our payrolls calculator, right? Obviously, we can have the same conversation about inflation. There are so many flaws in the calculation of inflation. So if I look at, if I swap out something as simple, well, it's not that it's so simple because it's a big component, but if I swap out OER for, sort of a market measure of rents, like apartment list, inflation's running at a 1% pace right now. I mean, I think all of this, I think that to me is the right way of thinking about what the starting point for inflation is.
But isn't that giving you a lead on what you think ultimately is going to happen with service inflation down the road?
Yeah, so I think from our perspective, what it means is that you are going to get this lift higher in inflation, but so what? So you lift toward the target as opposed to being above target now and going even further above target. I mean, I think if you look at inflation with just making some very modest and I think very reasonable adjustments, you probably wind up getting back to target.
This situation then is not something that you think will constrain the Fed's ability to reduce rates and respond to softness in the labour market?
I don't. I think the Fed has the right line on this. I think it is going to be a temporary sort of one-time shift higher.
Well, you say the Fed has the right line. Some Fed individuals at the Fed have the right line.
Yes.
I don't know where the whole committee is. Where's the whole committee on this?
Yeah, I mean, and as you would expect, there's just a divergence of views, I think, seemingly at this point. But it does seem that the sort of the momentum is drifting toward people having the right line, which is to say cutting in September.
If we're not going to see the full tariff impact, say, till 2026, can Can you see a scenario where the Fed is cutting at the end of this year, maybe starting in September, and then having to think about hikes next year?
Yeah, so this is a really important idea in the context of this is not COVID, right? I mean, I think people are looking at this sort of this drift that we're going to see higher in inflation, and I think that they're scarred. I think including Fed officials, specifically Powell, I think they're scarred.
He called it transitory.
100%. So I think they're scarred because of the whole, let's call it transitory mistake. But this is not that. We didn't ply people with mountains of cash through a helicopter drop of money. We didn't create a pent-up demand scenario by shutting down an otherwise really healthy economy and then turning back on. So I think the setup is so different.
Right.
Tom Porcelli, it's good to see you, sir.
Good to see you.
Appreciate your time. Thank you for being here. Tom Porcelli of PGIM Fixed Income.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.